Asset specificity.
Of the three critical dimensions, asset specificity is the most important. According to Williamson. 20 Asset specificity refers to those assets that one trading partner obtains in order to fulfill a contract, but would be difficult to use in any other transaction. Some examples of assets dedicated to a specific contract are employees with special training, locations or plant sites, physical assets, such as dies or manufacturing equipment, process knowledge, and brand name capital. As can be seen, asset specificity may take many forms. Asset specificity, depending on its circumstances and the degree to which the assets are non-transferable, may also bring about the fundamental transformation. When an organization is searching for a trading partner, many potential partners may be available, all of which start on an equal footing. However, when a single partner is selected, and a contract negotiated, it is possible that an investment in assets specific to the contract, that is, the transaction, must be made. At that point, the fundamental transformation takes place. The winner of the contract is now more dependent on the originating firm than before the assets were purchased. The originating firm is also more dependent upon the trading partner, since that partner now has specific assets that are needed to complete the contract. This mutual need is called bilateral dependency. 21. Example: when Aspinox needed the component to make its product, it considered several manufacturing firms. None had the exact part Aspinox needed, so all of the firms started negotiations from identical positions. Ultimately, Solis offered the best price and delivery schedule, and Aspinox awarded the contract to Solis. In order to fulfill the needs of Aspinox, Solis had to invest in some special machinery, metal dies, and employees. Although Solis could use the machinery and employees, although less effectively, for other customers, the dies were created specifically for the Aspinox account, and could not be used elsewhere. At this point the fundamental transformation took place, and Solis became more dependent on Aspinox to both fulfill the original contract as well as to continue the association. Aspinox is also more dependent on Solis, as it is now the only firm that has the specialized people and equipment to create the component Aspinox needs. The original contract and the need for and use of the specific assets have created a bilateral dependency. In order to protect themselves, at least in the beginning of the relationship, both Aspinox and Solis must have complex agreements in place. Eventually, as transactions become more frequent, the agreements will become simpler, because Aspinox and Solis will build trust in each other,